Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about a little bit of a different video. In this video, I'm going through quickly technical analysis of GameStop, AMC, EXPR, KOSS, and my expectations of it. Now, make sure to drop a like to this video to help this channel grow. Subscribe, notifications on. Let's jump right into this one. So, all the tickers in this video, just to start off, I would not even dare longing, but let's just understand a little bit of what's going on together here on technical analysis. Now, basically what they're doing here is attempting to go towards something called a short squeeze. And what a short squeeze is, that it's basically they are attempting towards going on for stocks that are high on the short interest. And how do you find it? So if you haven't watched my scanners for Finviz, for instance, you'll find it in the description below. But right on here, you can easily go float short, let's say over 30%. You go under a float under 50 M, so you know it's easier for them to manipulate. And then let's say you have an average volume of, well, actually it doesn't matter for the average volume, but a price under, let's say, 20 bucks. There you go. Right off the bat, we have a good amount of stocks right on here. Try to look, for instance, at AXDX, okay? 40.56. So a short squeeze is easy here. Hey, this one could probably go up if they have their eyes on it. So going on each of these, really just trying to find, let's say, one that is above 50. The higher, the better. That's exactly what they're going for. Now, GameStop here, for instance, the short float is 140% more than the entire float it has. So of course it's going to jump if a short squeeze is going to happen. Next is KOSS. KOSS corporations, you get to see this massive 600% almost candle. Short float is only 43.09, still significant above 35. You go to another one, EXPR. This one 12.82, but already played in a lot of short float, has slowed down. AMC. You're looking at 36.58, and you see that price action is insane for all of them. Now again, no news. It's just straight on manipulation by, well, not by significant one person, but it's an induced short squeeze that is not based on news whatsoever. So in general, it could be theoretically at some point the rug gets pulled, but on a 1 week perspective, of course, things are way ahead. They're all going to look bullish, but we want to look at a little bit onto the price actions and see perhaps where is the next supports. Now for GameStop, you need to look a little bit into a 2-hour perspective because things move really fast. Remember, this was what, 20 bucks something around 2 weeks ago? Not even. On literally the 11th of January, 2 weeks ago, was 17 bucks. It went up to 342 as we speak. You get to see there is a significant trading action zone there. Now, we'll go on through the supports and resistances for each, but technical analysis straight on don't really matter in that sense. But the supports and resistances are very important for this one, and your expectations of how far it's going to go. So taking a quick look, for instance, at KOSS, and basically we get to see it is very much off the same kind of movement. Now, it's not loading currently. My broker is being a little bit slow after seeing GameStop, but there we go. And you get to see basically in all matter of sense, it is as well exploding here. This one even looks stronger than the rest. You got as well NAKD is seeing a massive push as well there. Of course, they're all attempting just a short squeeze. EXPR, you're moving on here. It's retracting a little from the 1397 again. You can easily start expecting perhaps pullbacks, but in general, it looks like it is on a loop, right? So you got to look at AMC. If all of them are dropping down and one of them is on green candle, they're all going to go to green candle. So AMC right now is moving. You get to see KOSS is moving. GME is stabilizing a little but moving. But you can get to see that that is exactly a little bit off the levels that we're looking at. EXPR, if you were to look at Fibonacci retracements, even though it really doesn't matter at this point, significant support sits at 756, 605, 419, resistance 907, 1121, 1395. Of course, they can easily break that within minutes. Next, GameStop. Let's go for the last few days. From 37, you're looking at a support at 308, 250, 209, 1689, 1689, 120, and 382. Next, we're looking at, let's say, KOSS. Looking up at 69.70 all the way to $3. 55, 52, 443, 4436, 3652, 2668, and 1899. Next, moving on, say EXPR. I think we already covered this one actually. NAKD here quickly. 150, going all the way down to 34 cents. 125, 106, 92 cents, 78 cents, and 61 cents. And a lot of these, by the way, you're going to find him to have one of the highest records ever. For instance, here's KOSS. Here is their, basically, as far as I can go. On paper, this doesn't make any sense. And theoretically, I wouldn't even dare longing it. But you got to understand the pump. And basically, from what I understand, from what I'm scanning, is that KOSS, you're looking at $100 minimum. EXPR, they're trying to squeeze it to somewhere around $50. NAKD, around $2. What else? AMC, they're trying to do around $60 as well, similarly, although it's getting a bit of resistance in this level. And remember, AMC is beginning to look a lot like KOSS yesterday, and they really start attacking one by one. So it is a game. Listen, this is worse than Vegas because you can lose a lot of money quick. And stop losses are not going to really do much because it keeps gapping up or down, and candles happen significantly super fast. So I wouldn't advise any of my followers to play these ones. But, and of course I did scalp a little bit KOSS, but again, on book, if you get stuck with this one, you probably lost everything you're in it. And if you're shorting it, you could really be in debt big time and drop into bankruptcy. Now, I play both sides of the trade, and at the start, I believe I was a bit stuck in the KOSS short there, but thankfully I covered way too early. Well, actually, right on time, because right now it's over $66. But again, you got to be very, very careful when you're approaching all these ones. Now, the entire market is going red for one reason. Everyone is dumping their stocks, their techs, and everything and jumping to GameStop. And at this point, it is a NASDAQ index at this level. But again, you're looking at a high-risk play. And theoretically speaking, multiple things can happen. One, you could end up with the SEC end up putting a halt on these for, let's say, a week or something to try to investigate things, and the flow for the rest of the market, when a lot of money is being put into these meme stocks, will suffer big time. Two, it could be just that institutional buyers will just gang up on the little guys again on Wall Street bets and end up really pulling the rug hard. You gotta be very careful on that. They work together. Three, it could be literally that GameStop comes out and says, basically, hey, it could be some negative news, okay? Even though it's unlikely. But in all theoretically kind of perspective, every time you gap up, you increase your risk, but your reward comes thinner. And of course, if you like to go on to the dark side, you can always play options. And the current ones are 29 January. I don't recommend those ones, but maybe February 15th. Look at that, 320 went doubled. So that has been my perspective. It's high risk, but what do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.